we're back talking about taxes and impact on the economy and all that stuff. Happy New Year. And
Happy New
in
Year,
these
bro.
last few days of 2026, we've seen global impact of certain American actions, one of which was going into Venezuela, extracting Maduro, and bringing him back to New York and having him stand trial. In many ways, this is nothing new. It's been done before. And they've extracted somebody from another country, they brought him back and put him on trial for so-called drug trafficking. The law says you're innocent until proven guilty. So Maduro's arrested. We'll see what the justice system does. What we have heard is that Venezuela's oil, which is one of the largest reserves in the world, the Trump administration is telling us that they are going to control it, operate it, take in American companies to extract and drill the oil and all the business processes that go with it. That 303 billion barrels of oil, which is, I think, about 70, 80 billion barrels more than Saudi Arabia, we can understand what the impact would be because in the last 25 years, Venezuela, which was a very lucrative, prosperous nation, has dropped where the poverty level in Venezuela is around the 52, 55%. There's only a few people who are actually living a reasonable middle class life, if we want to call that. Putting those things aside, yes, the Venezuelans are impacted, yes, the Americans. But looking at where we are, what would be the immediate impact on the cost of living, on prices of oil to the American consumer? In your view, as a CPA, you do the taxes for people, at least for corporations, you're doing their taxes. They have expenses on vehicles and travel. How do you think that will have an impact? Will we actually see beneficial oil prices? Is it possible that California prices may drop like the rest of the country below $2 and maybe around the $1?
So first, let's get to why was Trump's interest in Venezuela what was it actually driven by? So based based on what we heard and on the news, the oil and energy level leverage was central. It was not about territory control, but it was about sanctions, policy, access to reserves, and influence over supply flows in the global energy markets. And what does this control mean economically? Economically, controls means deciding who can produce, export, ensure shipments, receive payments, and operate under licenses. The Financial Times also reported, was a really credible source, to emphasize that rebuilding Venezuela's oil infrastructure would take years and massive capital investment, making it a long-term economic strategy rather than a short-term fix. And in their in development in Venezuela, it can also do both. It can also reduce inflation and also increase geopolitical risk premiums. What it means is it can increase the supply. It probably can also reduce inflationary pressures, but also create more geopolitical involvement, and which increase uncertainty, and this will create market rises in the price of oil based on which perceived risk as an extra supply.
So basically, then, if we look at not technically an invasion of Venezuela, but we have the American administration going into Venezuela, extracting their president, who himself has a lot of controversy. Over the last couple of years, we've heard about his political grip on Venezuela. We understand and we know that the elections were claimed to be rigged and we talk about American elections and cheating or whatever of our own elections across America. But in Venezuela, there was suppression of the results. The opposition leader, who actually got the Nobel Peace Prize last year, is the opposition leader in Venezuela, who is now thanking the Trump administration for its intervention. So, from a geopolitical perspective, it's acceptable or understandable that China, Russia, and a few of these other global players may have impact in terms of how they react or what the impact to their economy was. But isn't the thing that many people are talking about, had Russia or China stepped into Venezuela, their interest would have also been the oil reserves. If Russia takes it or China takes it, it doesn't benefit the American people. With the Americans taking it and their ideas of capitalist society, would we expect them to operate in a commercial concept, in a capitalist business concept, allowing for all these issues related to drilling, production, retrofitting all these refineries that are out of operation or very derelict? They will require investment, but if Chevron and Exxon, all these companies are willing to go do that, it may impact their shareholders because they're going to be spending their capital. It's not taxpayer money, technically. Once that's done, the supply increases and prices could drop. I don't predict they'll drop immediately, but apparently we see some impact across the nation. There's claims of 175, 150 gasoline across the nation, albeit not in California. But even in California, there's reports of under $3 in certain cases. Leaving that aside, if I own a trucking company or if I'm in the transportation of goods business, I'm buying the goods and there's a shipping company involved. Am I likely to experience a reduction in my costs as a trucking business, transportation business owner, which I may or may not pass on to my customer? But if I do pass it on to the customer, is it likely that we will see deflation because we're experiencing lower costs of transportation?
So it works two ways. So short term, no. Long term, yes. So when how does this benefit taxpayers or trucking companies or other entities? Even when private companies invest, when there's more government oversight, when there's enforcement and the security is still requires public funding, these indirect costs accumulate over time and can accumulate quietly in federal budgets. Okay, so in other words, it's how does it reduce inflation or just shift global risk? So the energy, so it reduces vulnerability, not exposure. The price of oil is a fair market value of which is priced globally. So and so energy independence improves resiliency to shocks, but like it doesn't eliminate price volatility. So short term, we don't see a difference. Maybe long term you might, but that's down the road.
Okay, but when we hear the administration tell us that there's going to be increased supply, there's going to be reduced costs, and they're going to benefit all of us. And one of the examples was if the airlines' cost of fuel goes down, then we may benefit from travel prices in that area, whether it be something like Greyhound or American Airlines or United Airlines. If their cost of fuel goes down, then the possibility exists that the cost of air travel may go down. Those things
Mhm.
alone are not going to have a great impact, like you said, and maybe long term, not short term. If these prices go down, there are places like California that operate on a taxation system which is sales tax and other taxes on the petroleum industry. And if I remember correctly, California's gasoline taxes and the federal government's taxes accumulate to close to $1. So if we were to reduce
Mhm.
the taxes alone in California, our prices could drop around about $1 a gallon. The counter is when the price of the barrel drops, like you said, the income to the state government reduces because it's charging a percentage. If it's charging 7%, 7% of $5 is a lot more than 7% of $1.50. So, is there going to be an impact on state treasuries? Never mind the federal. And is that then going to
But
impact state taxes? Whereas on one side, we may see a benefit from the federal side, but we may be impacted locally.
that's a great question. So cheaper crude prices hits refineries first and and the drivers later, the consumers later. So pretty much what it means is due with timing. So the U.S. Gulf Coast refineries are optimized for heavy crude oil, which is also produced by Venezuela. Increased supply can also lower refineries' input costs, but the consumers benefit at the gas stations, at the pump. Usually, it appears later and more gradually. So it's like it's just as gradually you'll go. You'll see a difference of the difference in price long term. I'm not saying I'm going to give a specific timeline, but maybe 3 years, 4 years, 5 years down the road. And who
Got it.
benefits from the cheap oil prices? Short term, refineries benefit the most due to margin expansion. Midterm, consumers see some relief. Long term, the outcome depends heavily on geopolitical stability because oil prices reflect both physical supply and perceived risk.
With all this interest in the Venezuelan oil and everybody telling us that America's interest or President Trump's interest is the assets, specifically the oil reserves of Venezuela. With the Americans actually now in a position where they can influence political activity in Venezuela and maybe under the threat of the barrel, guide these people into a certain policy structure. What would that have as an impact economically, globally, and locally? Does the control of Venezuelan oil benefit the US, benefit the individual taxpayer, and the global? We understand global politics, but leaving the politics aside, just sticking to the finances.
In any way, it doesn't really affect. Um, so the sanctions that are created on Venezuela include enforcement, compliance costs, legal exposure, diplomatic strain, long-term reconstruction obligation. These costs don't appear on the gas receipt right away, but but they matter significantly to taxpayer and investors. So right now we care about what we're doing now. Does it affect us now? No, it doesn't. Down the road, we have to see what the Trump administration does long term.
What we saw a couple of years back when the Trump administration was replaced by the Biden administration, we had some changes in energy policies, whereas the Trump administration had tried to open up refineries, drilling, and oil fields within the US. There was talk about a pipeline from Canada into the US, basically adding to the supply of US oil reserves, oil supplies. When the Biden administration came in, the first thing they did is cancel some of those leases, and that impacted supply. Many oil companies, many people like Chevron, decided to take a step back, and we saw prices go up from where we were in California in the $3 range, mid 350. We went back up of $5. Are we likely to see those type of changes from this policy of acquiring or having access to Venezuelan oil. A couple of days ago, there was reports that the Trump administration said the Venezuelans have agreed to give something like 50 million barrels to the US on a regular basis. And the assumption is that they would be bringing those tankers, 50 million barrels worth, to the US and adding to refinery production. Is there going to be I understand that you said it's going to be long term, not short term, but if we add 50 million barrels on a regular basis, weekly or daily, how does that impact our own supply within the US? Prices, the individual, you and me.
So we were talking about 50 million barrels is a very common size. Um, but like I said, it's going to be tied to a few things. So let's just go back. I feel like what's going to be happening is I feel like based on the volume that we're going to be using, um, it's will take. It's gonna mean that we're gonna decide who can produce, who can export, who can ensure shipments. We're gonna receive payments and operate on a certain way under compliance rules. But I feel that it's going to be an uphill battle. It's going to take a while. Right now, they agree, and we're going to use it for advantage. But will that happen long term? I don't see it happening anytime soon, unless there's
Okay.
changes in policy and fiscal measures. Maybe I don't know, but at this time, I don't see it happening overnight.
Okay. All right. So basically, anything that we may expect from Venezuelan oil, it won't happen overnight. It may have a distant impact. Um, it may be a year or two. But switching from the Venezuelan situation, and time will show how that works out. Another thing the Trump administration announced, or Trump himself announced, is this concept of a tariff rebate. If we go back to the COVID situation, the government had opened up its treasury and started giving refund type of checks or benefits, whatever we want to call that. And taxpayers, business owners, um, literally everybody in America received payments due to loss of work because COVID had shut down people's businesses. We couldn't go 6 feet closer to each other. Many of these small businesses were impacted because they could not get the walk-in client. Many businesses, whether it be pizza restaurants, whether it be gas stations, they were impacted because we weren't traveling, we weren't driving on the roads. The administration came out and announced that they were going to offer, or not offer, but give refunds to taxpayers. Business owners were going to be able to apply for funds. Now, the administration is announcing a tariff rebate. I believe it's around $2,000 or $2,500, maybe per taxpayer, maybe per family. What
For
is
U.S.
the likely
citizens,
impact of that on the economy immediately? And then, as a side to that, we are being told that the tariffs have generated so many billions in revenue. Does the Treasury have the money to give every taxpayer $2,500? And I understand from a prior conversation, we have the economy get an injection to boost it. If you have $2,500 extra in your pocket, you might go buy that big screen TV or something similar that you may otherwise not want to do. Other than that, what other impact can we expect?
So when we talk about tariff rebates, or I like to call it tariff dividends, which is perceived by the Wall Street Journal, it really reflects when it recognizes that price increases have reached households. So in other words, from a tax policy perspective, this distinction matters. Rebates are considered temporary cash transfers, while tariff driven price increases tend to be embedded into long term pricing structures. So once companies reset their prices, they rarely roll them back unless competition forces it. So a rebate check, a single rebate check of $2,500, $2,000, per person, um, per U.S. citizen, it can't undo permanent price increases. So whatever the excess you're paying for a common commodity or commodities, it's just enough to offset what you already paid. So in how do tariffs show up on everyday prices for groceries, cars, and households? It shows up in stages, typically over time. So companies first work through existing inventory that they purchased at pre-tariff prices. Once the replacement inventory arrives at a higher landed cost, like transportation cost, freight cost, pricing decisions increase. So that means that once that tariff pass through is often delayed, but cumulative. Consumers may not feel immediate surprise, but over several months, prices will quietly rise, and you often see those increases in grocery stores and often be consistent.
Okay. Um, when we're talking about these tariff rebates, they go to the individual taxpayer or the individual, as we've said. During the COVID era, we experienced large corporations who were able to weather the storm, as we call it, of the loss of business, loss of customers, because nobody was walking into their stores. With these tariffs, we've in cases seen immediate impact where there's an importer who's importing stuff and he's had to pay more for his product. He's impacted and he's had to bring in price increases. On the other hand, we've seen many people like solar installation companies advertising, go get your solar right now before prices increase. We've had all this stock before. The new stock will go up because of tariff pricing. Large corporations may be able to stomach for a period of time the impact of tariffs, and they may be able to keep their prices in control. Smaller businesses are not capable of doing that. How will that impact our economy? How long before the larger corporations turn around and say, we have to pass on the tariffs?
Yeah, so it's just once the companies and like grocery stores so forth, they have their existing inventory once they run of that, and then they have new inventory coming in when with already added cost with like freight costs, transportation cost, tariffs already added. That's when they'll add pass on the same cost onto the consumer. At the end, we end up consumers end up paying more. And it doesn't really affect grocery store, and they're still making money. But what happens is the grocery stores are dealing with competition, they're dealing with inflation, um, they're dealing with less employees, layoffs. So nobody wins in this case. So with tariffs, um, it's just called like tariff rebates are just another word for political smoothing, not economic relief. So if tariffs remain in place, prices will tend to remain elevated because businesses are already recalibrating their cost base. They already calculated how much what the price is they're going to be selling it at ahead of time, because that's the only way they can afford to stay in business.
Moving on the tariffs concept, we're looking at tariffs in the US, and we're looking at how those tariffs impact the US individuals. Most of these tariffs apply to imports. So if we're producing our own stuff, if Nike was to produce its shoes, running shoes, or GM was to start remanufacturing its automobiles in the US, not just assembling them, but doing the complete assembly as they did some time back, those price costs would be built in. Yes, local production costs more because minimum wage rules and everything else, and the worker rights, benefits, if we add all those up, that is one of the reasons why these companies, producers, took to the outside world. They moved their production over to India, China, and even next door to Mexico. The NAFTA trade deal was supposed to make trilateral commerce easier between Canada, America, and Mexico. But most of the production moved to Mexico because labor cost of production was that much lower. We ended up having imports coming in due to the NAFTA, but in the US, we actually lost jobs. Now, something interesting, the Indian government has implemented a 35% import tax on you and me. So if you were to bring over your Apple phone, not as a visitor, but you brought an Apple phone and you were going to gift it to me, it's now going to cost you 35% in import taxes at the airport. You're not a big importer, you're just an individual. Back in the days of the 70s, when you brought a radio for your family member or you brought a video player, a VHS player, because they weren't easily available in India, there were taxes imposed on you at the airport. So right now, if we were to bring over an iPhone, $1,500, or any other phone, we're going to end up paying 35% on that. The argument is we want to make our own. They want you to buy made in India products. And a simple example, we lost you. Okay, there you are. A simple example is over in the US, Chrysler builds a Jeep, the Wrangler Jeep. They have the Rubicon. What's the cost of the Rubicon in the US? What's the cost of the basic Wrangler in the US? In India, after the tariffs that India imposes, the Jeep Wrangler that comes from the Chrysler factory is 50% higher than what you would pay in the US. Equally, there's another manufacturer in India, Mahindra. They produce the same vehicle on license. It's called the Mahindra Thar, but it's a mirror copy of the Jeep Wrangler. The souped up, real top of the line version costs around $30,000. The basic version is around about $15,000. Now, if we compare that simple cost, a $15,000 for a locally manufactured car under license, which replicates the Jeep Wrangler, yet the Jeep Wrangler in the US, even the basic Wrangler over there is about 30 something. So it's double the price. Now, if you want to bring that Jeep Wrangler, which you paid $30,000 for in the US, you bring it here, it's going to cost you another $15,000 on top of that. So it's $45,000. Argument being, why would you bring the Jeep Wrangler from the US when you can buy one here for 1/3 the price? Where I'm going with this is tariffs are intended to engage local producers to produce more locally. Yes, imported goods will go up in price because the tariffs increase that price. So if it says made in China, it's going to go up. If it says made in Mexico, it's going to go up. If it says made in France or Paris or wherever, the price will go up due to the tariff. But if it says manufactured in Michigan or manufactured in the US, not assembled, but manufactured, we can expect local prices to remain stable. We can expect employment to increase because the enticement is for Americans to buy more American made goods. So that cycle, yes, we argue that the tariffs will cost more, things will go up, we'll experience inflation. What is the impact of the reverse side of it? Local manufacturing, local production, more jobs, less unemployment, less unemployment benefits. Can we see that in the near future?
That's exactly Donald Trump's plan. Um, but the real person that benefits the most out of this is the federal government because they benefit through all the immediate tariff revenue. Domestic producers may benefit later if the imports become less competitive. So if we export more than we import, then it's good for GDP. So workers only benefit if those gains translate to reinvestment. So which creates higher wages, more hiring, more skilled workers. But this is conditional and is not guaranteed. So over time, I see this as a benefit, but if we're exporting more and we're producing manufacturing more goods and goods and automobiles and everything to other countries, then we can see it as a positive. But at the same time, it's not guaranteed.
Totally, because there is global collaboration across everywhere. Just in the microelectronics industry, the production of computers and stuff, while it may be that HP and Compaq and all these companies were making laptops back in the 80s and they were producing them locally with the Intel chips or the AMD chips, most of those productions of the laptop itself is now outside of the US. The chip manufacturing is outside of the US. And so some of the stuff that we've heard in the prior year is an effort to bring these in house. And one of the arguments there is the actual intelligence component of these places, these items, the engineering skills, the engineering ideology, the copyrights that go into making these, the skills of these engineers, and their national security impact. So why would you have somebody manufacture in China a product that's needed by the U.S. military? Would you not have it made locally where you can control the security interests of the nation and access to has it? We've had cases of where what we call industrial espionage. It's not somebody spying on the US or doing anything like that, or the 007 era. It's more of industrial espionage. People are coming in, working for a company, stealing their secrets, taking them back, their production ideas. And some of these people in the last year or two have been arrested, they've been stopped, whether it be biological research, whether it be artificial intelligence. Will this effort to bring home the new infrastructure needed for AI benefit? Not short term, obviously, because the setting up these places is going to take time. But for skilled workers, local employees who may be otherwise employed, can we expect an impact over the next 3 to 5 years where we actually do reap the rewards of this economic policy?
Certainly. So with uh, with uh, with these tariffs, U.S. manufacturing competition in the short term, they will provide temporary protection by raising the cost of foreign competition. Without this, we'll have a weak. We without this, we'll have a sustained investment and a weaker U.S. economy. Um, we also will see Um, on imported goods, we'll see higher input costs, and we'll have smaller margins, or we'll be having forcing price increases. So with this, the ones that benefit the most, the industries that benefit realistically from this, will be capital intensive, automated industry that can reshore more easily than labor intensive manufacturing. So, are these tariffs effective? No, they're not. They require complementary policies such as tax incentives, infrastructure, and workplace development. So, if we can create some type of tax rebate or tax incentives or deductions or what kind, um, give them credit for infrastructure, or encourage to have more workforce development or something along those lines, they'll be beneficial to a lot of manufacturers, and we'll have more many U.S. manufacturers here in the United States and not have to go anywhere else.
You bring up the concept of benefits. There's been many arguments, pro and counter. We have two sets of benefits, at least in the US. One is where we provide benefits to the individual. We have unemployment benefits, we have benefits for the sick and disabled, where we provide them resources so they can continue living their lives without too much economic stress. Beyond those, we have support for families. We have what's known as SNAP, which is benefit to help buy groceries and the basic needs. That we call sort of socialism, where we're trying to take care of the ones who may be not as well as us, or to be, in need of services, whether it be childcare, whether it be groceries, whether it be income assistance. On the other side, based on just our recent last conversation, there's corporate benefits. And you talked about tax incentives, the infrastructure benefits, in terms of if I come and build a new factory and I hire X number of people with X number of skills, then I can get tax benefits on a general basis, not getting into the politics of it, but from a tax preparation guy who deals with preparing taxes for the individual, for the corporation, and maybe those people who still have to file taxes, but they may be on government assistance. Is there any kind of difference between the benefit to the corporation and the benefit to the family?
Certainly, there's definitely benefit for the corporation because Trump, with the Trump's new big beautiful bill, he encourages U.S. manufacturers to reinvest, build manufacturing firms here in the U.S. So if a firm invests heavily in manufacturing equipment, machinery, um, a fleet of vehicles, anything under business for their use of their business, and it's 100% used for the business, then yes, they can get a write off entirely for the equipment for the year purchased from 2025 to 22 into 2028. However, to to make our economy stronger, not right now, but for the long term, it benefits, but also is we also got to look at the state of the economy. We also got to see how our consumer spending habits are. Um, so with the tariffs, they don't really help reduce the U.S. national deficit. They help with the margin, but they don't help solve it. So tariffs are create billions of dollars of revenue per year, but the budget deficit, national U.S. national budget deficit, is in the trillions. So, and another thing is, how does this tariff revenue compare to Social Security, defense, and interest? Tariff revenue is relatively small to compare to Social Security, defense, and interest. So if tariffs reduce imports over time, does that make our revenue stable? Yes. Does it make our revenue unstable? Yes. Successful tariffs shrink their own tax base. So when we have more tariffs, uh, the corporate revenue gets smaller and smaller. So that's where we run into the problem. But it also creates a national deficit problem with spending growth and interest costs over increased interest costs over time. So
Right. So
it's not a
basically,
win-win situation.
if we were to try and look at the deficit, the federal deficit that we keep hearing, that is money that the federal government owes to other nations, other corporations, import exporters who export to the US, and that money has to be paid back just like the mortgage we have on our houses. And that accumulates interest. So if we have $5 trillion in national debt, the interest on that is going to be very significant. It will eat into our GDP. So this effort to bring in production locally to the US, create more manufacturing jobs in the US, can impact that deficit because we're producing our own stuff and we're using our own stuff. But it may still take a long time for the US to get to a balance of trade deficit where they have very little or no deficit and they're not paying unnecessary interest. Because right now, the federal budget, a large chunk of it is paying the interest on that debt. And it's not too long before we get to a point of 50-50. Half the federal income goes to paying the debt, the interest, and the other half goes towards local services, whether it be education, law enforcement, benefits to those in need. There seems to be a tsunami of financial disaster if we keep going on this road of allowing the deficit to grow. And in order to stop that, or at least put the brakes on, how impactful will these tariffs, local production, local manufacturing be on that factor itself?
So the three important things that we need for long-term stability: we need to have more spending cuts, we need to have more economic growth, and we need to have tax reform. The tax reform of the big beautiful bill is great, but we were still lacking spending cuts and we're still lacking economic growth. So if we want to see an immediate impact, um, we need to have like growth to pick up. How does it impact our GDP in the Trump era? It's combination of multiple things. It's part of economic. We need economic resilience paired with higher uncertainty. So that's where we find ourselves in right now. Um, and and how these tariffs have on hiring and wages? Higher costs discourage hiring and capital investment. Simple.
Got it.
And
Just
probably
moving
we'll
to
see
another
higher
thing.
grocery prices.
Right. Moving to another thing that President Trump has announced in the last few days. He wants to eliminate property taxes throughout the US. That may become a tsunami of itself, in my view, because states like California, Texas, they have various regulations on property taxes. In California, we had something from back in the late 90s, 1980s, which was called Proposition 13. That limited how much our property taxes could rise and at what pace. We've had many efforts in the California legislature to try and weaken that Proposition 13 or even eliminate it. Texas and many other states don't have those constraints on property taxes. So whereas in California, on a $700,000-800,000 house, we can complain, or we can feel that the property taxes of 9,000, 7,000 are very extreme because we're paying like $500 a month to live in a house which technically we own, but we're still paying that amount. And if we really go back in time, 20 years ago, we could have rented an apartment for 500. And now we're paying 500, 600 in property taxes as an average monthly. Texas is even worse from what I understand. Should the legislature and President Trump implement a nationwide property tax elimination, what would be the impact on a state like California?
So with Gavin Newsom's tax policies, it creates high volatility, which to live in California you need to have make a lot of money to deal with economic booms, sharp downfalls in tough times. And the ones that are most affected are high income earners, but the volatility impacts everyone. So when we talk about California compared to other states, it has one of the highest taxes combined with the overall cost structure. So living in California is really expensive. It's getting more and more expensive day by day. Um, so when we buy a home, we have our mortgage payment, but then we also get an impact account. We also pay our mortgage along with our property taxes, along with our um, homeowners insurance. So you might have a $3,000 mortgage payment for a nice, beautiful home, but in reality, you're almost paying 5 grand a month. If you're not
Yep.
earning between 15, 20,000 a month as a husband and wife, hey, is California way too expensive? You're better off moving out of state.
And according
So,
to the statistics, many people have already left California, and many people are projected to leave California just for that reason. But if this property tax were to be eliminated, which would require congressional approval and then passage of a bill, the impact on just California and the services California provides would be significant. California itself has a 16, 17, or maybe more deficit. 17 billion, 18 billion is what the numbers they're throwing around. Take property taxes out of the picture. If, just like you said, if California was to keep providing the services it does, something's going to have to give. And that may be personal income taxes, which is the only other way California can raise money. It may be sales tax increase, and that will it balance everything out? Property taxes are eliminated, and now we have to pay more in sales tax and income tax to California.
so it works the same. It works this way. So if we eliminate property taxes, the ones that benefit most from for elimination of property tax rates or property taxes are states like high income states like New Jersey, Illinois, Connecticut, New Hampshire, Vermont, Texas, and so forth. Those states are have the highest property tax rates in the nation. And then if we eliminate that, let's say in California as well, we eliminate the property taxes, but in California it turns around because it's his own state. They will turn around and increase our income tax. So we'll probably pay more in sales tax. Our sales tax might jump from 8% to 12%. This the California basic sales tax rate, and that's not including like district taxes in state of California. So let's
Right.
say, I mean, if you live in LA, you're paying 10%. The state rate is 7.5%, for example. Where's 12%? And then in LA has a 3% transit tax or district tax. That's like you're paying 15% just in sales tax. That's insane. You have to be a
So it's
millionaire
just
just to
like
live in LA.
it's taking from Peter and paying to Paul.
Yeah.
Okay.
Mm.
I think from the property tax concept, personally, it may be just like giving it to Peter and then taking it from Paul type of concept, or putting the money in your right pocket and taking it out of the left pocket. You're just going to pay either the federal administration, or you're going to end up paying the local state. Um, all of these impacts, I'm sure we'll find out how they come to fruition and how they impact long-term economy. Maybe some of those impacts we will experience by the end of this year. But I want to thank you for the discussion and being able to at least bring to attention or clear up some points and provide information to the general viewers. Until next time, thank you, and we'll see what else we can cover, or whatever Mr. Trump or the Newsom administration comes up with that's going to impact the bank account, and we'll talk on that again. Thank you. ਆਪਣੇ ਨਾਲ ਜੁੜੇ ਸੀ ਹਰਜਿੰਦਰ ਗਿੱਲ, ਜੋ ਹੈਗੇ ਨੇ ਕੈਲੀਫੋਰਨੀਆ ਦੇ ਵਿੱਚ CPA, ਆਪਣੇ ਟੈਕਸਸ ਔਰ ਬਿਜ਼ਨਸ ਅਕਾਊਂਟਿੰਗ ਕਰਦੇ ਨੇ। ਇਹਨਾਂ ਦੇ ਨਾਲ ਆਪਣੀ ਗੱਲਬਾਤ ਹੋਈ ਹੈ, ਜੋ ਪਿਛਲੇ ਦਿਨਾਂ 'ਚ ਹੀ ਇੰਪੈਕਟ ਹੋਏ ਨੇ। ਵੈਨੇਜ਼ੁਏਲਾ ਦੀ ਪ੍ਰੈਜ਼ੀਡੈਂਟ ਮੈਡੂਰੋ ਗ੍ਰਿਫਤਾਰ ਕੀਤਾ ਗਿਆ, ਔਰ ਥੋੜੇ ਦਿਨ ਹੋਏ ਨੇ ਟਰੰਪ ਸਾਹਿਬ ਨੇ ਕਿਹਾ ਸੀਗਾ ਕਿ ਉਹ ਪ੍ਰਾਪਰਟੀ ਟੈਕਸ ਐਲੀਮੀਨੇਟ ਕਰਨਾ ਮੰਗੇਗਾ, ਔਰ ਮੈਡੂਰੋ ਦੀ ਜਿਹੜੀ ਅਰੈਸਟ ਸੀ ਉਹਦੇ ਕਾਰਨ ਅਮਰੀਕਾ ਤੇਲ ਪ੍ਰੋਡਕਸ਼ਨ, ਇੰਪੋਰਟ, ਸੇਲ ਤੇ ਵੀ ਕਬਜ਼ਾ ਕਰਨੇ ਦੀ ਕੋਸ਼ਿਸ਼ ਕਰੇਗਾ, ਔਰ ਆਪਣੇ ਲੋਕਲ ਆਇਲ ਪ੍ਰਾਈਸਿਸ ਥੱਲੇ ਜਾ ਸਕਦੇ ਨੇ। ਕਾਫੀ ਸਟੇਟਾਂ ਦੇ ਵਿੱਚ ਹੁਣ ਹੋ ਗਏ ਨੇ $1.5 ਦੇ ਨੇੜੇ, ਪਰ ਕੈਲੀਫੋਰਨੀਆ ਦੇ ਵਿੱਚ ਹਾਲੇ $3-4 ਤੇ ਚੱਲਦਾ, 3.5 ਸੁਣਿਆ ਸੀ, ਤੇ $2 ਦਾ ਫੇਰ ਵੀ ਕੈਲੀਫੋਰਨੀਆ ਤੇ ਆਪਣੇ ਬਾਕੀ ਸਟੇਟਾਂ ਦਾ ਫਰਕ ਹੈ। ਵਾਸ਼ਿੰਗਟਨ ਵੀ ਕੈਲੀਫੋਰਨੀਆ ਵਾਂਗ ਹੀ ਹੈਗਾ। ਦੇਖਦੇ ਹਾਂ ਕੀ ਬਣਦਾ। ਇਜਾਜ਼ਤ ਦੇਵੋ, ਮਿਲਦੇ ਹਾਂ ਅਗਲੀ ਵਾਰੀ। ਮੈਂ ਇੰਦਰਜੀਤ ਕਾਲੀਰਾਏ, ਤੁਸੀਂ ਦੇਖ ਰਹੇ ਹੋ ਸਾਂਝੀ ਸੋਚ TV ਤੇ ਅੱਜ ਕੱਲ ਅਮਰੀਕਾ।